Let's migrate over to single best chart. I'm going to turn to my Bloomberg terminal and tell you the VIX is now under 30, 29.96. I'm going to call it calmer markets, even with the weight. Single best chart is what the pros are looking at. They're all looking, when in doubt, at the fixed income market. This chart is an actual Bloomberg chart. I haven't TVized it. It's a little hard to see, but this is what we look at in the trading day. And the yield down is the flight to quality that we saw, and we've bounced up that sort of like inverse VIX. Marc Chandler, you're watching the bond market within the swirl of everything else. What do you watch within the 10-year and the 2-year? Is it single point analysis, or are you looking at spreads within the bond market?
Sure, I think both are important. Right now we're looking at both. The 10-year yield is important as a benchmark for long-term interest rates, but the yield curve is probably one of the best predictors of the economy, and the flatness of it became more concerning towards the end of last year.
Which yield curve does Marc Chandler look at after decades and decades of doing this? Do you look at the vanilla difference in yield between the 10-year and the 2-year, or do you have a Brown Brothers Harriman special one?
No, I'm afraid I just look at the 2 and 10-year, but this is an important reason why. It's because it's sort of what Keynes taught us, and that is to say that the markets are like a beauty contest. It's not to pick who we think is the most beautiful, but to pick who everybody else is going to think is most beautiful. And I say that's why I follow the 2 and 10-year curve, because that's what everybody else follows.
Right. What's the most ugly? If you're not going to pick the most beautiful, Marc.
Excuse me? The most ugly.
What's the most ugly? Yeah.
Well, no, it's a good question. I mean, I'm concerned that we still are going to see further backing up of U.S. interest rates, and I'm concerned that the resolution of this debt ceiling crisis that we're having in the U.S. that could lead to a shutdown is going to be both guns and butter. That is to say, we're going to get a cap lift on spending for both defense and non-defense spending, coupled with the tax cut, coupled with the Federal Reserve not buying as many bonds.
Right.
We have upward pressure on U.S. interest rates.